Good day, everyone. This particular entry is going into our member area first. So over at the Patreon site for members, it is going over on the Patreon site first, and it's going to be up for free. And then later on, we're going to release this on YouTube and any other video sites that we're using. And we're going to place it in our How to Begin series. So how to begin investing, or how to begin trading, or even where do you want to begin. And we're going to talk about that a bit today. But first, we're releasing this, we are releasing this for free in the Patreon area, or the Patreon site. All right, before we begin, I want to make a couple of statements. You can begin the journey with $0. All right, so you can start, nowadays at least, with $0. But if you start with $0, the very first thing you need to make sure of, and I know this is something that Dave Ramsey talks about, it's just a general principle and it's true. You need to start with money that you can afford to lose. That is why you will hear guys like Dave Ramsey say things like, don't start investing until you have plenty of savings. Just cold hard cash. 6 to 8 months worth of living expenses minimum. I think personally, this is just me, I think that's minimum. I think, and again, this is just me, the route that Dave Ramsey starts folks on is too conservative. I think their emergency savings needs to be much higher. That's just me. But regardless, you have to have that first. And then you can start looking at what you want to do with investing and trading. But that cash is left alone, right? That's its own segmented thing. Do not use money that you can't afford to lose. There are yahoos out there that have gone into debt to trade. That is beyond stupid. Not only should you not go into debt or literally borrow money and then use that money to trade on, degenerates do that. Degenerate gamblers do that. But you should have plenty of savings and cash off on the side as a separate thing, right? So that we just want to stay that first. It stays there. That cash stays alone in that high yield account, 6 to 8 months minimum. Then, okay, you can start looking at trading. Now, I want to make a second statement here. We are not going to talk about risk tolerances in this particular entry, okay? You can have a conservative approach to risk. You can have a moderate approach to risk. You can have an aggressive approach to risk. Just real briefly, I think DTG, or Discovery Trading Group, has a wonderful term for that concept. They just call it the risk knob. You can turn it up, you can turn it down. Reward, profit, it's tied to risk. So what do we mean there when we say that? Because we're just getting these introductory statements out of the way. You can have the exact same strategy, or the exact same, let's call it a trading program, and run it, and make the exact same identical moves. And one will make 5% and the other will make 25%. Well, what's the difference? The difference is, doing just that, just turning up the tolerance for risk, or turning up the risk knob on the moves made, right? Just make the position sizes more aggressive. It's why I have often told ones, look at gambling mathematics. And I think all traders, I think all investors, I think every human is actually a gambler. The only question is, are you a good one? And what we're talking about is not being a degen or a degenerate. We're talking about the mathematics. So when it comes to your risk tolerance, that's like, are you going to bet, $10, or are you going to bet 100 on the same move? That's risk tolerance, and we're not going to discuss that today. What I want to sort of cover here to begin with, and it's something I have mentored traders for many, many years. And it's something I never went over specifically in the beginning, and I really, really think we need to now. The more years I've done this, and mentoring traders, I think the more this has to be discussed first, and that's objective. So that's the first question I have for you is, what are you looking to do? Why do you want to be a trader? Okay, we're going to use that term trader because we're going to cover a lot of that in this entries. What are you looking to do? And making money is not an answer. I'm sorry, but it's not. Because I'm going to ask you, do you really want to be a trader? And you say, yes, I really want to be a trader. That is a very different statement than, well, I need to make some money and I want a regular income and I want to stay at home. That is a completely different answer. That's a completely different statement than I want to be a trader. I don't like the word as it's used popularly, investor, for very, very analytical, very anal retentive reasoning on my part, very quantitative reasoning on my part. I don't like that term. That's a discussion for another time. Regardless, right? I get it. People use the term investor. So we're talking about money that you don't take up. You have a pile of cash and you just want to grow that and compound it and grow it through longer term investments. For some people, that concept is attractive to them. Now, you can run that and not take an income. You can just grow the pile larger. You have plenty of savings off the side. Now you've got this other money and you see yourself more as the investor of a 15-year time span. That is, so we've already covered two things that are completely separate. Like, how do you see yourself and what do you want to do? Well, I just want to make money and sit at home and have an income. That's a different answer of, I see myself as an investor, like a guy that, and again, I'm covering this so many times because I can't tell you how many times I've been talking with people and then they come back at me later and say, oh, sorry, I need the money, so I had to drain my accounts. Well, that's what your savings is for. What are you talking about? Well, I didn't really have any. Well, then you shouldn't have been doing any of this. Right? Regardless. So I'm going to say that again. So you've got that pile of money. You've got it in your high yield savings. You've built it up. Awesome. Now you've got some other money and you say, I see myself as an investor. That's very different. And investors can take an income as well. But that's very different statement than I just need some money and I want a regular income and I want to stay at home. Two totally different approaches. And they are different approaches in the market. And we would say you have a different objective. And you need to answer these questions first. You need to know what your objective is before you begin first. Because I want to make money and sit at home is not the answer. You have to determine what it is you want to do. And I can tell you this right now, probably at first you're not going to know. Right? It's like being 18 years old, right? I'm a guy in my 50s, but I remember what it was like to be 18 or 19 years old. And I even kid around with guys that and girls that graduate high school, and I'll kid with them. It's like, so let me ask you something. And you could see them sort of brace up, and it's like, are you getting sick of the question yet? So do you know what you want to do? Do you know what your career's going to be? I remember that. It's like I had no idea what it was that I wanted to do. It's like, do I get one more summer vacation? That was my only concern. I was 18, 19 years old. I just want one more summer vacation. Can I just take this 3 months off? And my dad's like, oh no, you got to get to work. And I won that argument. It's like, nope, this is my last one. I know that when I begin, that's going to be it. And there's no summer vacation on a regularly scheduled thing where I can just take 3 months off. So sorry, Dad, I'm not getting to work. The other reason was I had no idea what it was that I wanted to do with my life at 18 or 19 years old, getting out of high school. I didn't know. Some people do. Some people actually do. You listen to a guy like Jocko Willink, right? He knew what he wanted to do from the time he was like 6. Right? But the point is, for the rest of us mortals that don't have like a particular switch turned on, you may not know the answer to the questions that I just posed to you as far as objective. So what I'm going to do is I'm going to go through each of these and describe them a little bit, and you can chew on them. And ultimately, you're going to have to figure out for yourself what it is you want to do. Like the rest of us did. All of us had to figure this out for ourselves. Now, I said before, like, I just want to make money is not an answer. In a way, actually, it sort of is. And the answer would be income. Right? You just may decide every so often, I want to know there's an income that's coming in like clockwork at regular intervals. Income. And that is actually a particular approach. So you may decide that what you want is some years in the future or right now. It depends on how you begin or the size of the account when you begin. But after the cultivation of the account and growing it, the real point is you just want at regular intervals You want a better handle on markets and the way they function. You want to be better informed, and it pays you a regular income. Okay, for that, I would say that kind of person, if that was put to me, that kind of person is looking at something we call fixed income investing. You will hear non-professional guys call it dividend investing. When I was sort of more retail, I would say, I would even use that term, dividend investing. But the actual term is fixed income investing. That's what you will hear in the professional world. I would advise you to sort of stay away from a lot of those dividend investing guys online. Most of them are what I call yield crack addicts. It's like, hey man, you got some higher yield, and they chase yield, and that can end you in a world of hurt. So I personally prefer the term, it's more professionally based, a fixed income approach or fixed income investing. Now know this, fixed income is it is a broad term in and of itself. It can be applied in a number of ways. In very, very broad ways, there are fixed income products that short-term traders will trade on a short-term basis, and they trade in fixed income products, right? But we're talking about objective here, what it is you want to do. And for the purpose of this entry, we're not talking about fixed income products necessarily at this point. We're talking about probably what you're looking to do is something like fixed income investing. Now, as we said in the beginning, you can start off anywhere. You can start off with $0. You cannot start with $0 and start grabbing an income. It's going to take money to make money, right? So if you're starting off with $0, you're looking at making regular capital contributions. And I tell everybody, generally, you have to keep adding capital regularly to your account until you're at least at $2.5 million. Maybe $1 million, but at least until you're at $2.5 million. Set it up on a weekly basis, something you don't think about, and it's just regularly being contributed to the account to accelerate the compounding process, right? But you can start off with $0 and do that. Just start off with $0, set up a weekly thing and say, hey, I want to get into fixed income investing. Okay. Or you could start off with $1 million and you're probably going to be making your fixed income or pulling the income from the fixed income account much more quickly. But let's get back to objective here for a second. You're looking at the end goal to sit on your butt, and at regular intervals, that money just keeps coming in at regular intervals. As we said, you're looking at something like fixed income investing. If that's your objective, I don't know. Everybody's got to figure this out for themselves. I won't post it here. The language is sort of extreme, and we run this as a Christian, family-friendly area. However, there is a scene in the movie The Gambler with John Goodman, I believe. I'm going to warn you, there is extreme language. However, let's rename it to screw you money, right? And he uses a non-friendly word instead of screw. But if you don't mind the language, it's probably some of the greatest financial advice put to film. If I paraphrase what he said there, any idiot that gets up $2.5 million knows what to do. You get a house with a 25-year roof, you get an indestructible Toyota crap car, and you put the rest in the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of solitude. That sets you for the rest of your life. Well, what's he talking about when he says you put the rest in the system at 3 to 5% to pay your He's talking about fixed income investing. That's exactly what he's talking about. Now, the GTC sample portfolio that we run, a segment of that is dedicated to my own approach that I developed, a systematic discretionary approach to fixed income investing. I refer to it as an equity income hybrid core. Why do I refer to it that way? Well, because I designed the approach. It's systematic discretionary, and it's a hybrid. It uses several different concepts, but the objective of the account, I'm going to tell you right now, is not to have 20% years. It can, it has, but that's not the point of that account. The point of that account is to pull in an income. And what we're going to do with the GTC Traders portion of the account that's dedicated to this equity income hybrid core I have is demonstrate just that. As a matter of fact, on the GTC sample portfolio, now that we've gotten it to a stage where I've built it up a little bit, the sample portfolio that is, we're going to rework how we do those grids, right? Because the point of anything that's fixed income investing is not a high return. It's getting regular income at regular intervals. And if people are determined to start, I honestly believe that's where they should begin. Now let's move on just a little bit. You'll hear the word investing. I don't like that word. Investor, for very analytical, personal, quantitative reasonings. But that's a discussion for another time. But I get it, right? Everybody uses that term, investor. So what are we talking about that? You have a pile of cash. I'm going to say it again. Don't do something stupid and start trading money that you can't afford to lose, or start trading your emergency fund money that's like 6 to 8 months worth of living expenses. So aside from that, right, you have a pile of cash, and through wise longer term investments, I don't like that word, but you know what I'm talking about, you turn that into a bigger pile of money and you compound the gains over time. You actually can pull an income off of that too, but you have plenty of savings. But the objective is not the income. The objective is you see yourself as more an investor, like 15-year time span, Warren Buffett, Charlie Munger kind of thing, right? Or maybe a shorter time period, right? Warren Buffett says forever is his preferred periodicity. I know a guy that got his start in tech, actually peer-to-peer is how he got his start. He's a Midtown hedge fund guy. I don't know him personally. I was just around him for a while back in the noughts. But he had a saying, right? And I really liked it. He did do peer-to-peer. That's how he got started. And then he moved to more the hedge fund business. He has a Midtown hedge fund, at least the last I heard. He had a Midtown hedge fund. And I liked his phrase for it. He said, shorter time frame than Warren Buffett, longer periodicity than almost any trader. But he did see himself more as the investor type. Although he would refer to them as trades. Again, I'm not going to get near that whole thing. I prefer to look at them as trades too. But longer periodicity, you understand what we're talking about. Many approaches to that. There's valuation. I'm a valuation guy. So for that, the GTC sample portfolio has a valuation investing account. A segment of the GTC sample portfolio is dedicated to my own approach. It's long, short, systematic, discretionary valuation, long, short valuation approach. Or if you want to use the term investing, there's some guys that are not valuation guys, they're growth guys, right? That's a whole different breed, but it's all fits under that umbrella of investing. Some people decide they want to go that route. Then there's us traders. Now you have to remember, GTC traders stresses something called a multi-strat approach, or multiple strategies at the same time, non-correlated thesis to improve the risk-adjusted returns, if we're going to use the professional term. But this is in the How to Begin series, so we run everything better for smoother returns. That's just the way to think about it. So I'm also a trader. I also have that hat on, and we are a different breed. We are a different breed, and that's why I said at the beginning, people will say, hey, I want to be a trader, and I say, are you sure about that? Like, define your objective first. Decide what it is you want to do. Traders, you have to have a different, I don't know what to call it, just a different build than the rest of humanity. In the social media streams, I saw somebody talking about Brazilian Jiu-Jitsu, and they said that Jiu-Jitsu is for people who enjoy difficult things. And I thought that describes trading very well too. There are some people that are just built that way. They don't mind risk. They enjoy difficult things. And you have to enjoy difficult things. You have to be ridiculously stubborn, because most people quit. Most people quit when it comes to attempting to be a trader. So a trader, by definition, to succeed, to become a trader and join our ranks, you have to be stubborn. Because by definition, in that means you kept pushing forward to try to figure this out. We've talked about periodicity somewhat, so we can go over periodicity. I think that if you're talking about trading, well, I'm gonna leave my hang-ups aside, but I think you're talking about like intraday trading, like day trading, in and out the same day, 3 to 5 days maybe, 20-day swing trades, or even position trades that last 45 days. That's the periodicity we're talking about. Psychologically, it's very demanding. Perhaps you have heard a statistic, and people don't, Okay, we're going to get to my anal retentive side, but I think it's important to understand this. You'll hear the phrase 95% of all traders fail. That's not true. Think about what that's saying. That's saying 95% of all traders fail. Well, some of us have made it into the ranks. You want to use a jiu-jitsu term, right? Or a black belt, right? Well, if you've got your black belt in trading, it's not like every day that you wake up, there's a 95% chance you're going to fail, right? You've sort of made it into the ranks. So it's not true that 95% of all traders fail. It's the people that attempt to get into trading. And of those people that get into trading, 95%, actually I would say it's higher. I would say 98% of the people who think they want to start trading and attempt to short-term trade, their accounts are dead and inactive within 9 months. I've heard that statistic from folks that worked at the clearing level and brokerage level. When they attempt trading, short-term trading, 98% of them, the account is going to be dead and inactive, and they will have failed within 9 months. So that's why I stress to new folks, are you sure you want to be a trader? There is stress. It affects every day of your life. It's a bit lonely, to tell you the truth. Black swans can happen wherein you did nothing wrong. I think about May 6, 2010 was one of those incidences. You did nothing wrong, and it can destroy every bit of your work. A Corzine can happen. Literally had nothing to do with you and wipe you out, and you did nothing wrong. A software error. This is one I've encountered. I've encountered May 6, 2010, and I encountered software errors and other, how do I put this, errors that can wipe you out. Some of us have that build. It's the same, I think, as being true of being a business owner. Not everybody can be a business owner. Some people, it's like, I think personally it's more difficult to go work at a 9-to-5 job where you sacrifice your time for somebody else. But they decide they want to go that way. Okay, but some people have that entrepreneurial spirit. It requires a specific build. I was talking with Iron Stevie on the personal channel I have, not GTC stuff, but my personal channel, in the comments on one of the podcasts recently. And I think he's right. You need endurance. My point is you got to be stubborn, because when you first start, it's probably not going to work. And you have to get used to just a different psychological way of looking at things. He used the phrase, it's a very old phrase and it's used quite often, but I like it as well. Strong opinions that are very weakly held. Well, that sounds contradictory. Welcome to trading. We enjoy, as traders, doing very difficult things. And when you start shortening that periodicity from like fixed income investing that lasts 9 years, and you may switch out the product, but it's almost indefinite, to investing, which may be, shorter than Warren Buffett, but longer than any trader, is that midtown hedge you like to say, or short-term trading, it gets more and more difficult. It gets more and more difficult. And that's why I said at the beginning, you may decide you may not want to be a trader. But you want a better handle on markets. You want to do it yourself. You want the liquidity that's there for yourself, right? Like in a 401k, try and take any of that money out, a big sizable chunk of your money out. You're going to either have to loan it to yourself, or if you want to liquidate it because you genuinely need that cash and you've exceeded your 6 to 8 months worth of living expenses, guess what? You're going to pay a 60% hit because it's not all your money. I'm not a fan of 401ks, right? There's a way to do them. There is a way to do them. But yeah, that's a topic for another entry. So you may decide, I want to do it myself. I want to learn about the products. I want to learn about markets. But I just want that regular income coming in. You put the rest in the system at 3 to 5%. Okay, people need to decide for themselves if that's what they want to do. That would be looking at fixed income investing. I tell people, even if you decide you want to be a short-term trader, I think you should start off with fixed income investing, because that's the easiest place to start. That's like the white belt version of all of this. You decide that's where you want to begin. If you run into a problem with trading, you still have that fixed income account investing that you set up for yourself that's paying you an income. It lessens the psychological burden. Many traders have noticed that. Many short-term traders have something, you're looking at them, set on the side for fixed income investing, right? For just that reason. It lessens the psychological pressure of short-term trading. I myself have a fixed income hybrid core approach to fixed income investing. We use equities and a couple of other instruments, and there's many pieces to it. It's in the GTC sample portfolio. When you see us talk about a longer-term equity income hybrid core purchase, that's what I'm talking about. Because you can't just turn on being a trader. It's not like a 9 to 5, and it's like, oh, I'm just a trader. I'm just going to start pulling in an income. Does not work that way. I try not to have months where I don't make any money, but it does happen. The rent still comes due. The electrical bill, or for the Canadians among us, the hydro bill, it still comes due. The internet bill comes due. The mortgage comes due. You need regular, fixed incomes coming in at regular intervals. And fixed income provides that. Fixed income investing. And honestly, I honestly think everybody should start off there. I think that is the white belt version. I half wondered, did I screw up with GTC? See, back when I did this myself, on different iterations, I ran something called a challenge project, starting off with $500 and then regular capital deposits. I think back at that time it was $25. And people really seemed to enjoy that. And it showed the growth, and one segment of it, as I always do, sort of running risk parity, I segmented off to that, to fixed income investing and equity. And it showed how to start off with zero once you have the 6 to 8 month worth of the living expenses, starting off at zero and then building it up, and then eventually how to take an income off of it while you still use it to grow it, and how you can still grow it. Partial income, it's not going to be a lot at first. Right now, the GTC sample portfolio, even though it's not running a lot, I think the income at this point is $16. That's more than tier 1 costs at the moment. So the income off of not the entire GTC sample portfolio, but just that segment that we have apportioned off to fixed income or my equity income hybrid core, it's paying $16 on average per month. That's the cost of tier 1, folks. We're not taking that income every month because we're doing something a little different with it. But it doesn't take long to start building up. I don't know. I had some people say, oh, well, I really love that $500 challenge project, because as you did that over the years, you just saw it grow and grow and grow, and everything you were talking about. But like, well, we have the sample portfolio. I don't think I screwed up, because if you'd kept going with that, you would definitely have over what we had in the GTC sample portfolio. I think it's around $21,000 at the moment. It started off with $50,000, and I think we took $20,000 and segmented it to my equity income hybrid core. I don't know. Maybe we'll run the $500 challenge on the Patreon site. We'll see. But personally, I think it's just a knob, right? Just do the ratios differently if it's a smaller account. It's just a ratio. I don't know. We'll have to see about that in the future. But I'm telling you this, in conclusion, you have to think about your objective. If you don't know your objective, just look over our shoulder, because that's all this is, and check out what we're doing with that equity income hybrid core. It's basically fixed income investing. It's my design, my approach at fixed income investing. That's why I call it a equity income hybrid core piece. My design is, by the way, not designed to be some yield crack, dividend investing for higher yield approach. It's built so the thing. Why do people want fixed income? Because it's generally more conservative. I want to know the income's going to be there, right? And honestly, I think that's the best place to begin. Even if somebody does become a short-term trader, it lessens the psychological approach. They can add in other layers of things they want to do. When we do our course, and we're going to do a GTC course, I'm going to break down our approach at and all the different pieces and how I put it in for the equity income hybrid core, and how you can even modify it and do different things with it. That'll be in the course when we do that, along with valuations and Lord, scores more things than anything I had in the past. My whole approach to it is good. I want it to be one of the single greatest trading courses that's out there, actually done by an actual professional rather than one of these, no offense guys, but 20-year-old kids who discovered RSI and MACD and thinks they're going to do a trading course now. It's like, that's a joke. Come on, man. It's like, if you're gonna learn how to do this, learn how to do it from somebody that's demonstrating to you in real time how it's done. with reason, rationality, balance, showing you, don't like just look at us. Go look at other folks that are published in databases doing this. Do you see how it's comparable? Do you see? So learn it from somebody like that, not from somebody that got, what did one of my business partners call them? The trade station generation that thinks they're quants. They're not. Regardless, that's been our approach. That's been our thoughts. Our thoughts are just good till canceled. This is in the How to Begin series. You have to decide what your objective is first. Okay? And that has just been what it always has been. If people ask us that question, how do I get started? Well, this is one of the things you got to consider. Your objective. What do you want to do? And it has just been our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost a dime.